Hello friends, today I am going to talk about government grants in Ind AS 20. Nowadays, whether it is central government or state government, they come with a lot of incentive schemes which attracts a lot of industry to set up their factory in the state or in the country. So in this accounting standard, we'll try to understand how these government grants are recorded in books of accounts. Try to understand what is the meaning of government grants. Before that, let's understand what is government assistance. So government's action to provide economic benefits specific to qualified entity or range of entities, okay, are called as government assistance. So economic benefit is provided by the government, right? And it doesn't include indirect benefits through the action affecting general trading conditions such as infrastructure development, etc. Okay, so normal development by the government is not considered as assistance, but as when there is a specific economic benefit which is provided to a legal entity or range of entities, that is called as government assistance. Now let's understand what is government grant now. Okay, so government grant is a government assistance by whom? By the government by transfer of resources. Okay, so that means there is an economic benefit which is transferring to the entity, legal entity. Okay, for past or future compliance of condition relating to operating activities. That means the government is giving you a condition, either you have fulfilled or you are going to fulfill in future. In either of the cases, based on the condition mentioned in the contract between the government and the entity, the transfer of resource portion is called as government grants. Let's look into an example to understand how the government grants is identified based on the conditions. In 23-24, an entity provided catering and cleaning services to the government under a contract that produced 30% of its annual revenue. The entity provides service to the government at a similar rate to its other large customers. Is this a government grant? Okay. So what is happening here? There is a catering company, okay, or you can say one entity who does catering business is providing catering and cleaning service to the government under a contract that produced 30% of it is total revenue. So total revenue of 30% is coming from the government. The entity provides services to the government at the similar rate to compared to other large customer. That means there is no difference in the charge, correct? Now whether this is a government grant. The provision of catering and cleaning service to the government is a normal trading transaction of the entity, and there is no government grant. Such income will be accounted for as revenue arising from rendering of service, because there is no conditions attached here, right? It is simple service given to the private company or private entity. Similar service is provided to the government entity. Now let's take B example. In 2023-24, an entity provided catering and cleaning services to the government under a contract that produced 30% of its annual revenue. It's equal to question number A. The government uses the services of this particular entity on a condition that at least 1/3 of the entity's workforce comprises adult with physical disabilities. Okay, the entity provides service to the government at a premium rate compared with its other customer. Is this government grant? So here if you see, there is a condition attached between the government and the entity. What is the condition? That 1/3 of the entity's workforce comprises adults with physical disabilities, right? So if the entity fulfills that condition, then the government is going to give at the premium rate, right? So let's see what is the answer. As per Ind AS 20, government grant is assistance in the form of transfer of resources for compliance of past or future conditions relating to operating activity of the entity. The premium paid by the government over the normal rate is the government grant. It is a transfer of resources to the entity in return for compliance with conditions relating to employment of disabled employees. Only the premium excess over the market rate would be treated as government grant, because the normal rate what you charge to the other customer will be treated as revenue from normal sales, but the extra premium what you're getting from the government is will is equal to government grant because of fulfilling certain conditions. Understand how do we recognize government grants in books of accounts, okay, or how it is accounted. So government grants, monetary or non-monetary, should be recognized only when the following conditions are satisfied. Okay, so there are two conditions. Let's look into it. The first condition is that there is a reasonable assurance that entity will comply to the specific conditions attached to the grant. Okay, that means there is 100% chance or assurance that the entity is going to comply with the conditions which the government has specified, right? If there is less than 100% chance, then there is no question of government grant, right? Because if you are not fulfilling the condition, then government is not going to give you any grant or benefit. Second, grant will be received. That means you have that assurance that if you complete the condition, the government is going to give the grant. Sometimes what happens, there are a lot of legal procedures to be followed to get the grant. So if the management feel that the procedure what management is going to follow may delay the government grant, or the chances of getting the government grant is very minimal, then in that case you can't recognize the revenue, the government grant. Okay. The government grant should be recognized in profit and loss statement on systematic and reasonable basis over the periods in which the entity recognizes the expense for which the grant intends to compensate. That means if there is a condition and based on the condition you are going to spend money to fulfill that condition, similarly the government grant has to be apportioned to the profit and loss account based on the expense you have incurred. We'll look into this particular condition or fact in the next slide. But the point here is that you can't recognize the government grant immediately the full amount in the current year. It is possible if the condition is completed in the current year. But if the conditions demand you to spend money in subsequent years, then the government grants has to be deferred and it has to be recorded in subsequent years. So we'll look into a different business case in the next slide. An example to understand about recognition of government grants. Business case 2. X Limited is awarded a government grant of rupees 6 lakhs, receivable over 3 years, 4 lakh in first year, 1 lakh in each of these year, that is second and third year. As part of the conditions, it should create 10 new jobs and maintain them for 3 years. So this is the very important sentence here. What is the condition? The entity should create 10 new jobs and maintain them for 3 years, right? That means you should not remove the people from the entity. So they have to continue for 3 years minimum. The cost of recruiting the employees is 50,000. That means when you recruit them, there is a cost to be incurred is 50,000 towards recruiting these employees. And the wage payable to them is year 1, 80,000, year 2, 1,10,000, year 3, 1,20,000. The entity has reasonable assurance on satisfying the conditions. What is the accounting treatment for this in the books of the entity? Okay, let's see the solution here. As per Ind AS 20, government grants should be recognized in ratio of the related cost incurred to receive the grant. Correct. So here you are receiving 6 lakhs, but can you recognize this 6 lakhs immediately in the first year? The answer is no. Why? Because the company is going to incur different type of cost in year 1, year 2, year 3 relating to the salary what to be paid to these 10 new jobs, right? So the grant has to be apportioned and has to be categorized in respective years. You can't consider all total 6 lakh in the first year. Okay. Therefore, grants should be recognized in profit and loss account on a systematic and rational basis over the periods necessary to match them with the related cost. That is mostly matching concept. It should recognize income over 3 years in proportion to expenses, and the balance income as on balance sheet date should be presented as deferred income in liability side. So the total grant received or receivable from the government is 6 lakhs. Now let's see how this 6 lakh has to be reported in year 1, year 2 and year 3. Okay. So the estimated labor cost, if you see, the first year is 1,30,000. So 80,000 towards the wage payable plus 50,000 incurred for recruiting these 10 people, right? 50,000 was the recruitment cost. In total 1,30,000. Second year, the wage to be paid for these 10 people is 1,10,000. Third year, the wage to be paid is 1,20,000. So the company is going to incur 3,60,000 rupees to fulfill the condition as prescribed by the government, right? Now the 6 lakh, how you are going to allocate to each year? That is where is the calculation part we need to check, right? So if you see here the calculation, 6 lakh into for year 1, 6 lakh into 130 means 1,30,000 divided by 3,60,000. So proportionate, we have to calculate how much amount has to go to government grant. So here if you see the amount, it is 2,16,667. Second year, 6 lakh into 1,10,000 divided by 3,60,000, it comes to 1,83,333, right? And in last year it is 2 lakhs. So that is how the grant will be distributed to 3 years, 6 lakhs rupees, right? In the first year, what is the deferred income? The deferred income is 3,83,333. Okay, because out of 6 lakh you are recognizing 2,16,667. So balance is deferred income. Okay. Now let's see the journal entry. So at the time of receipt of grant, in first year, you are not receiving 6 lakhs, you are receiving only 4 lakhs. So bank account debited 4 lakhs. Government grant receivable is 2 lakh because total you have to get 6 lakh, right? To deferred income 6 lakh. So at the time of receiving the grant itself, you take all the total receivable to deferred income. And now what you will do? Now you have to distribute that from this deferred income, what amount you have to take to government grant every year. So if you see in year 1, the deferred income debit is 2,16,667, which we derived in the table if you can check here. To government grant is 2,16,667. Okay, that means what is happening? From the 6 lakh deferred income, what you reported at the time of receiving the grant, from there 2,16,667 you are debiting. So you're reducing the deferred income, which is your liability, and taking this amount to P&L account. In second year, you are taking 1,83,333 to P&L account, and the third year 2 lakh rupees to the P&L account. Now here, one important point to note. If the condition requires the full amount of the grant to be repaid, now you have to be very careful here. If there is a condition which requires that if you fail to comply with this requirement which government has defined, grant to be repaid, if at any time during the 3-year period of employment condition is breached, then the grant can't be recognized in the profit and loss until the condition is satisfied. That is at the end of 3 years, once the employment criteria was satisfied during the period. That means if the government says that anytime if you breach the requirement, then you have to pay back complete whatever government you have received from government, then in that case, you have to wait and see that after 3 years, you have complied or not. Based on that, you have to recognize revenue. You can't recognize revenue every year till you fulfill the condition by end of 3rd year. To understand grants related to specific fixed asset. This grant is very common in India, where based on MOU signed by the government and the entity, even specific assets are installed in the company or any specific amount of assets are installed in the state, then the government gives grant in that case. So let's understand how these grants are recorded in the books of accounts. So grant related assets, what is the meaning of that? The primary condition in this grant is that an entity should purchase, construct or otherwise acquire long-term assets. It may include some additional conditions like grant may restrict the type or location of the assets or when to acquire, right? So how this will be accounted? So there are two types. One is alternative 1 and another is alternative 2. First we'll understand about alternative 1. Amount received is deducted from the gross value of the asset. That means whatever government grant you receive, you just deduct from the asset what you have purchased, from the cost of the asset. Second, the reduced amount of the fixed asset is depreciated over its useful life. That means, for example, you got an asset for 10 lakh rupees. Now government is giving a grant of 1 lakh. So you net it off and say that my cost of acquisition of the asset is 9 lakh and the 9 lakh will be taken as the base on which the depreciation will charge. So this is alternative 1. There is one more alternative. What it says, amount received is treated as deferred income. So whatever amount you receive from the government, you treat as deferred income. Deferred income is recognized in profit and loss account on a systematic and reasonable basis over the useful life of the asset. That means whenever the asset is depreciating, at the same time from the deferred income, that is your liability, from there one portion of deferred income will come to profit and loss account. So it will match with your depreciation and income based on certain ratios. Okay. Example to understand more about how to record account government grant for fixed assets. Business case 3. Madhva Limited purchased machinery for rupees 5 lakh on 1st April 2024. it received 2 lakh from the government for acquisition of the asset. That means you received immediately once you purchase this asset as per the conditions specified by the government. As per the accounting policy, the company follows SLM method of depreciation, 10 years life. That means every year you have the same amount of depreciation under straight line method. Discuss the accounting for the government grant as per Ind AS 20 with the help of journal entries. So let's understand how to record this. As per Ind AS 20, when a grant received relates to a depreciable fixed asset, it should be treated as deferred government grant and it should be amortized to profit and loss account in proportion of depreciation expenses of the asset. This is what we understood in the previous slide. Alternatively, the government grant can be deducted from the respective asset carrying amount and depreciate the remaining carrying amount over the remaining useful life of the asset. So two alternatives are there and we'll try to solve this problem also in two alternatives. Let's take alternative 1. When grant is received, what entry you are going to post now? Cash or bank debit 2 lakhs to deferred government grant. Okay, you are not touching the asset now. You are just posting whatever you received from the government as deferred income. Okay, which is be treated as liability. So the above journal entry doesn't affect the machinery account and it's still continue the value of rupees 5 lakh what you have paid to your vendor, right? Now what happens at the end of 1 year? Depreciation debited 50,000 to machinery because the value of the asset is 5 lakh and on that you are charging straight line method. Life of the asset is 10 years. So per year the depreciation is 50,000. Hence the entry is depreciation 50,000 to machinery. But what will happen here now? I have to post one more entry because I have treated 2 lakh received from the government as deferred government grant, right? Now that I have to debit and I have to credit to profit and loss account or as other income or government grant income 20,000 rupees. Why it is 20,000? Because you received 2 lakhs and these 2 lakhs you have to amortize for 10 years because the life of the asset is 10 years, correct? So when depreciation of 50,000 is coming on the expense side, at the same time 20,000 will come from the income side. Alternative 2. Let's see in alternative 2 how this grant is going to be accounted. So when grant is received, in the first case it was bank account debited to deferred income, right? Here what is happening in second alternative, it will directly get adjusted with the cost of the machinery. So here cash account debited 2 lakhs to machinery 2 lakhs. Now what will happen? The carrying amount of the machinery account after the above entry is 5 lakh minus 2 lakh is 3 lakhs, right? So it is reducing the cost on day first itself whenever you receive the grant from the government. Now what will happen at the end of the year? At the end of the year, depreciation account debited to machinery 30,000, 30,000, right? So what is happening here? The depreciation is 30,000 instead of 50,000 because you have reduced the value of the machinery on day first, right? So 30,000, 30,000, right? Nowhere you are showing again government grant. It is directly netted off with the cost of the machinery, right? So this is all about the government grant. If you like this video, please